how to scalp and day trade the supply and demand trading strategy so that you can start making money consistently in the markets. That's what we are going to be talking about today. We are going to be looking at 3 different recorded trade reviews. You can see one right here in front of your eyes. But before we do that, we got to dive into what charts you need to be looking at, the time frame sequences, and other variables that you have to consider, because you are going to eat away your profits if you don't implement these changes. So let's get straight into it. I appreciate if you guys like the video, subscribe, and if you guys have any questions, let me know in the comments below. All right, let's dive down into these ultra low time frames. So the first thing that we need to talk about is how many markets you're going to trade. If you're focused on scalping and day trading, you're going to be trading 1 to maybe 3 maximum markets. You are not going to be trading 20. Okay, if you're looking at 20 markets, the pros and cons to this is that if you're looking at 20, you can become a very mechanical based trader and require a lot from a trade setup. But what you're going to lack is is the relationship and how that market moves, because every market moves differently. They're not all the same. So you're going to lack that market condition and that relationship with that market. Okay, so that's why we want to focus on 1 to 3. We don't want to be looking at 20 different markets because that's a lot to be looking at, especially if you're looking at scalping and day trading, because the markets move very quickly. It's like trying to have 20 different girlfriends, all right? It's a lot easier to build a relationship with 1 to 3 girlfriends versus trying to build a relationship with 20 girlfriends. Trust me, it's a lot of work, it's a lot of time, and it's a lot of money trying to manage a lot of different girls. Okay, you could imagine what that's like. You're having a conversation with your second favorite girl, but then you're like, oh, remember that joke I told you last week about the bar manager? And she's like, no, right? And then you're like, oh my gosh, that's right. I told that to my other girl, right? And so you lack that relationship if you're looking at 20 different markets. Okay, so that's why we want to focus on 1 to 3. Now, the second thing that we have to talk about is spreads and commissions, because you want to be trading these liquid markets. We're looking here right now at gold, where you can see the spread is very, very tight. We're on the 15 minute. Let's drop down to like the 1 minute so we can see this better. Look how tight the spread is, all right? It's almost non-existent, all right? The market closes in 30 minutes, so it's actually a little bit wide, okay? But it's very tight versus if we go off and look at, say, Swiss yen. Look at the spread, okay? We're on the 1 minute time frame. If you're going to be trading the 1 minute and 5 minute time frames, you need to be trading very liquid and very tight spreads and commissions, because you're going to eat away your profits if you are trading these types of markets, okay? So if you're going to be trading them, you focus on the majors and you focus on the indexes and you focus on the major commodities. You aren't trading 5 minute time frame, pound Swiss, pound CAD. You're not doing that, okay? You're going to lose a lot of your money. You're going to lose your edge here in the spreads and commissions because they add up. The third thing that we need to talk about is the news. You want to avoid all news that's about to be released. So coming into, today is Monday, there's no news today, which is fantastic. But coming out Tuesday, 1 hour before the US session opens, we have CPI numbers coming out. I do not want to be scalping or day trading or have pending orders sitting there on the books with this news about to drop. That's how you create massive spreads. That's how you end up owing money to your broker and you get absolutely liquidated. Okay? So avoid all news. All right, so now that we got all that fun stuff out of the way, let's jump into the charts and we look at some trade reviews. So the first trade that we need to be looking at was on the NASDAQ. We took 2 on gold, but we're going to be looking at NASDAQ first, or the S&P, sorry, S&P. Why did I really like this for buying opportunities? Okay, over the last, weeks and like months, it's just making higher highs and higher lows, okay? So we're just making big impulse move correction, impulse move correction, impulse move correction, and so on and so on. Over the last 24 hours from last week, we sold off, but where are we selling off into? We were selling off back into this area of demand. And this is what I said from our Sunday meeting. Stocks are at all-time high levels, and I wish to continue to be looking for buy setups. Regarding the higher time frame demand zones here are the areas of interest that I would want to use for multiple time frame buy setups. So that means we're at all-time high levels and we're pulling back into areas of demand. I want to be buying this thing. Okay, so prices pulled back into this area of 1 hour demand, and we're going down to our 1 minute demand, our 1 minute time frame to wait for confirmation. Okay, this is the multiple time frame confirmation trade setup. I have done videos on this exact setup before, talking about the talking about the multiple time frame setup. I will have that in the description below. Okay, so if we look at this on the 1 minute, we had prices going back into this lower lows and lower highs, lower lows, lower highs. I want to see a massive buying candlesticks coming out. I want to see prices breaking this downward trend line and removing these opposing areas of supply. That's what I need to see in order for me to start getting long. We have this big, strong, explosive move to the upside. That was my indication of the buy setup. Okay, so that would be the multiple time frame confirmation trade setup using a 1 hour, 1 minute time frame. Now, I was trading gold today. That was my main focus, but I noticed this one, which I missed out on because I'm actually kind of upset that I was looking at gold. But gold, I went two for two, so I can't really complain. But on the S&P 500, prices came back into this 1 hour demand, and we still have the same old regular price coming into higher time frame demand. We need to see confirmation of buyers stepping in. Okay, that is the setup of the multiple time frame confirmation. I will have a full breakdown of that whole trade setup in the description below for that YouTube video that breaks down this whole setup. But you guys are like, I want to learn how to scalp. Okay, that's a lot that I'm trying to throw at you by trying to break down this whole setup. But it's sitting inside 1 hour demand. We have the confirmation, price pulling back into our demand zone. That's how we are taking that as a trade. Okay, now let's go to gold, because this is the gold opportunities. Going into the open, not even before I talk about that, gold alone has been up over 7.5% over the last 2 weeks. We look here on the weekly time frame, it's at all-time highs. It had a very strong close, and it's up over 7.5% over the last 2 weeks. I don't want to be selling this thing right now. I don't see any indication of this thing trying to slow down. In fact, the large money banks, institutions are adding to their positions. So I went down to my, I think it was a 5 minute time frame, and what I saw was at the open, we had this lower low, lower high, lower low, lower high, and we had this massive move to the upside. All right, why do I like that area to be looking for the buy setup? Okay, here in this case, we broke the downward trend line. We removed these opposing pivot point supply here. We removed these opposing pivot point supply here. We removed that pivot point. We created also a new high for the day. Okay, and this is the demand zone that we would be buying back into for the demand. Okay, it's the simple 1 time frame setup. I've done a video on this breaking down what the 1 time frame setup is, but that is exactly it. Okay, 1 time frame, we're looking for buying opportunities because the higher time frame trend is in an uptrend, so I want to be looking for buys. And then on the smaller time frame, here on the 5 minute, we actually broke the structure of breaking momentum, removing pivot point zones, and this demand zone alone is very strong. All right, I was looking at it on the 15 minute. Okay, that was a fantastic trade to get into. Now, I did manage to catch the long, but I didn't get the fill there. In fact, the first trade it was the second trade that I took. Let me look. This was the trade that we pulled back into here on the demand zone. So we sold off hard, got the pullback back into demand, all right? And we saw these buyers instantly starting to take control. Now, I got the pullback over here. How I was trading this was here we made this strong move to the upside, and we were pulling back into this 1 minute demand zone after it was started to take off. So we pulled back into this 1 minute demand zone right here, and I was like, great, I want to buy this thing if I see the buyers take control. All right, I saw the buyers take control over here on the 5 minute close when we had this very strong wick shooting to the downside and then instantly reversing. Okay, that was my long execution to jump into this trade long. Okay, It's kind of a different type of setup. We call it our wick trade setup in the group, but we're still using supply and demand as our baseline concept. All right, we're pulling back into a demand zone and we have this wick reversal setup right here and we're getting long. All right, this was a quick 1-to-1. I was long. We can see the heat map here. This is where all the buyers and sellers, you can see these real orders getting placed. Okay, so I was long just looking for a quick 1-to-1, and I believe I closed it. Yes, so I moved my stop to break even and then was eventually hit. So the first take profit. Okay, that was the first trade. That was the second trade. The first trade we took was calling the reversal, because we talked about this being the one demand zone pullback, right, for a buy setup. But what we used here in this case was prices rallied up. Gold tends to reverse, but before we get that, we tend to get these long wicks shooting to the upside or downside before it reverses. Okay, it was the same thing. It was the same thing right here at the before the open. We had this wick and I was trying to get long, but I held off from getting long. Same thing from down here when you have these long wicks like this shooting to the downside. Same thing here. It's just a very wicky market. All right, it tends to push to the new highs or new lows and then it reverses. So that's what I was going based off of. And so when we made this strong push to the upside at the open, I was looking for this thing to sell off back down into that demand zone. But not only that, I was also sitting back up into a nice little supply zone up here. Okay, so we were pulling back up into a 5-minute supply zone. Once again, this is smaller time frame type stuff, guys. This is what you want for day trading, okay? So we were pulling back into a little supply zone and we had this wick reversal here, inverse hammer or something, whatever you want to call it, maybe shooting star, whatever. I always get the candlesticks mixed up, okay? But that's what I want to see. I saw the sellers coming in and then I instantly started pushing short. And so this was the trade review here when we started recording. So this was the trade price going back up into the area of supply. After the market opened, we made that strong move. So after the market opened, we made this strong move push to the upside that was sitting inside the 5-minute supply zone. I was like, I think we're going to sell back down into this area of where it pushed out from. So I entered the short, hoping prices would go back down into that area of demand, and it worked out really well. We can even see here on the heat map, I'm just speeding through this recording. Let's go here. So sellers took control and quite rapidly, it went in my favor, okay? Let's speed this up, And actually right here is when we started printing this guy. It was like a 200 contract seller I was trying to sell right here. So it was a big order sitting right above there. So this guy came in, held his position all day, sitting at that level at 200 contracts, pending order. It actually just touched it, but it never got him filled. It touched it, but it never got him filled. All right, so a lot of people are front running this guy right here with 200 contracts. A lot of people are trying to sell this before, hoping that prices would go down. 200 contracts is quite a bit for the gold market. Anyways, we continue to push down, make these new lows, and I get out of my take profit. Okay, 2-to-1, what was that? 400. Okay, so in the futures market, it was doing quite well. So if you want to be looking at scalping and stuff like that, you've got to be using 1 to 3 markets maximum, because you're going to understand that relationship. You're going to build a relationship of how that individual market moves. Not only that, you want to make sure that you're trading a liquid market that has tight spreads and commissions, okay? Every market moves differently. You want to make sure that you have these tight spreads and commissions, and because you can profit off of how these markets move based off of each individual market's relationship of how it is, okay? Some people are really good at trading gold. Some people just can't trade gold to save their life, all right? You got to find what works best for you. Some people like trading 20 different markets and maybe trading a 15-minute, 30-minute, hourly time frame. But if you want to be looking at these 1-minute, 5-minute time frame trades, you've got to be looking at these smaller time frames. You got to be looking at smaller markets, like looking at 1 to 3 maximum, okay? You guys can always reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram, and I will help you out there. I appreciate if you guys like the video, subscribe, and I will see you in the next one. Cheers. Bye-bye.